How's it going, everybody? It's Stas here. Welcome back to another video. So in today's video, we're going to be doing an overall market update, taking a look at the Dow Jones, the S&P 500, and the NASDAQ. We're also going to be doing a trading update, talking about what I personally did today in the stock market, as well as some stocks and ETFs that I'm watching and looking to trade right now in the end of January, heading into the month of February here in 2020. And as you all read in the title, Facebook and Tesla, we're going to talk about those two stocks as well as some other ones that reported earnings here after market hours. And let me tell you guys, it's a pretty volatile aftermarket session here for these couple of stocks that I want to talk to you guys about, and make sure to stay here in the next couple of minutes as we do get into those stocks. But before we do get into the video, all I ask from you guys is if you find value in this video, simply go down below for me and hit that like button, and also consider subscribing to the channel if you want to see further content from me. And if you want 2 free stocks from Webull valued up to $1,400, I have an affiliate link down below in the description box where you put in $100 and you get 2 free stocks valued up to $1,400. So go take advantage of that, get your free money, and let's get right into the video, starting off here with the S&P 500. And we'll talk about the Fed meeting today, some key takeaways from that, as well as just some interesting statistics around previous viruses here and how they've affected the stock market. I actually have a chart that I want to show you guys that is pretty interesting here in a couple of minutes. So the S&P today down $2.84, down 0.09%. So nothing crazy of a day here for the S&P, but if we go to the daily chart, we can see actually, we were doing quite well earlier on in the day. Not tremendously well, but we were green, right? We were green. We were continuing the rally that we saw yesterday. And if you guys weren't paying attention to the markets recently, we had a big drop. I believe this was on Friday, then another big drop on Monday, and then Tuesday we rallied, and then we continued the rally again heading into today. But then ultimately, when the Fed meeting began, I believe it was around 2 p.m., that's kind of where the market ended up falling, and that is 2 p.m. Eastern Standard Time. And what ended up happening in this Fed meeting, guys? Very, very quickly, I have some notes here. Well, they decided to keep the federal funds rate steady. And you guys know back in 2019, we had 3 rate cuts, and in 2018, we actually had 4 rate hikes, which is why the stock market, saw a lot of pressure towards the end of 2018. The Fed was like, holy crap, we have to change our policy. Then boom, 3 rate cuts since the 4 in 2018, and that's kind of been helping out the stock market here. Let's be quite honest, guys. And why did the market kind of fall here? It subsided a bit at around 2 p.m. Well, maybe it has to do with the repo operation here. The repo operation has been heavy here for the Fed over the past couple of months. I believe for the past 6 months to be exact, and they're expecting to continue this through April, but they're slowing down the operation kind of heading towards April. And many people think that the repo operation, this has been really propping up the market. The Fed has been trying to prop up the market this way. So maybe that's why it kind of scared people towards the end of maybe this little rally that we saw this morning. And I'd love to know what you guys have to think about that down below in the comment section. So for the S&P, that's kind of it. The Fed meeting here, and of course we have the virus out there that's still a fear for everybody in the markets, traders, investors, and just people out there in general. But that didn't seem to do too much to weigh the market down today, but it definitely seems like people are still holding on to that as a fear, which makes a lot of sense since it's still a fresh virus. And now that we're on the topic of this virus, we might as well talk about some historical statistics here, which I'm sure many of you guys will find very, very interesting. So take a look at this chart here on your screen. This is the global stock market performance following epidemics stemming back to April 2003, stemming back to SARS. I'm assuming that's pronounced SARS. So you guys can see here on the bottom of this chart, it's a metric that follows the months following the epidemic, and it shows 6 months of data here, and the percentage on the left is obviously how much the global stock market has increased since the announcement of the epidemic, really since the virus has stemmed, since it's pretty much started. So for SARS here, you can see 6 months after, the market went up 20% almost, roughly 18%. April 2009 with the swine flu, the market went up 30% almost 6 months following the epidemic. May 2003, MERS, I'm assuming that's pronounced MERS. This virus came out, and the markets didn't do too well, right? 6 months, well, I guess you can say that's a pretty good return. See, my minds are wired for the 2019 return as being normal. And now that I see 8% in 6 months, I'm thinking that's bad, but in reality, that's really good. So 8% from the MERS virus in 2013 in a 6-month span since the beginning of the epidemic, that's not too bad. Now we're looking at Ebola. 6 months in, roughly the same as MERS, around a 6 to 8% increase in the global stock market. Now we're looking at the Zika virus, January 2016, and this is a bit lower than Ebola and MERS. It dipped a bit in the beginning of the epidemic. The markets actually almost went down 6 to about 8%, and then ultimately after month 3, between month 3 to 6, the markets were able to push back up roughly of a gain, I'd say 4, maybe 5-ish%. And now that I'm looking back at Ebola and MERS, their gain is not 7-8%. That's wrong. It's more like 5 to 6% after 6 months, which still, that's pretty good, because if you look from a full year perspective, 5-6% in 6 months, well, that's 10-12% in a year. And the S&P 500 has what? It's been doing around 7-8% historically. So that's really, really good. Now that we're looking at Ebola, October 2018, this is where the markets actually ended up negative after 6 months. The only time the markets have ended up negative, and obviously since then the markets have skyrocketed. So what is this data and this chart telling us? Well, it's telling us that it's pretty dumb to just panic sell out of the market due to there being some sort of virus, some sort of epidemic that's causing some short-term fears. And there's another statistic here from Charles Schwab. An analyst said out of 13 outbreaks since 1981, analysts at Charles Schwab found the index, I'm assuming the global stock market index, returned an average of 0.8% over a 1-month period following an outbreak, and 7.1% over a 6-month period. So pretty much out of 13 outbreaks, you would have made money just by simply holding through the stock market, through the volatility. And that's kind of how I'm approaching this crisis here, this virus, the coronavirus that's breaking out from China and that's infecting many people in different countries. I believe if it can get subdued here in the next couple of months, sure, it might affect the China global economy, or the Chinese economy and the global economy a little bit, but ultimately, I think the markets in general will continue, and just panic selling, it's not a good idea in my opinion. So now that we got off on a little side tangent, not really a side tangent, but now that we got some facts out about the market, some interesting statistics, let's talk about the Dow. The Dow up $11.60 at the close, up 0.04%. Nothing too crazy here in terms of the Dow, guys. Nothing too much to talk about. If this 1 minute chart wants to load, we can see what it did today. Today we hit about 28,900, dumped heavily down to about 28,700. So there's a lot of volatility today in terms of the Dow Jones. Then we rallied all the way back up to 28,800, kind of coasted there. Then the Fed meeting, Jerome Powell spoke. Then ultimately the markets ended up dumping down even further. So one thing that the Dow, the S&P have in common, They're still technically in an uptrend, right? This is still technically a higher low, despite the fact that we haven't really fully, splurged back up, committed to really pushing for an all-time high again. It's still technically a higher low here for the Dow Jones. Now, if we're talking NASDAQ today, guys, the NASDAQ down 50 cents here from what I'm seeing on the futures, but if I pull up my Yahoo Finance app quickly, we can see up $5.48 at the close, up 0.06%. So if we're looking at the NASDAQ here on a technical basis, very similar to the Dow, the S&P, it is holding the uptrend here on top of that 180 SMA on the 4-hour chart. And in terms of the daily price action, you can see we were at about 91.50, then all of a sudden the markets dumped about 90 points in a snap of a finger, it seems like, and then we rallied back up to the Fed meeting, and then we dumped down, very similar to the S&P and the Dow Jones. So overall, guys, that is pretty much it for the market update here. Let me know down below in the comments, what are your thoughts on the markets? Do you think they'll go higher from here? Do you think they'll go lower? I'd love to know your opinions on that. Now, let's talk about what I personally did. And let me be honest, guys, today was not a very active day for me. You know that yesterday I sold out of Square. Square was a swing trade, and honestly, if I held that today, guys, I would have made a lot more money, but hindsight's 2020. It's one of those things that you can't control it, obviously. Sure, I could have got in this morning on the breakout here, but to be honest, I missed the entry. And now with the price action I'm seeing after hours, hey, I might get an entry maybe tomorrow in Square stock at around 74, 75 bucks, and we'll talk about that here in the next couple of minutes. And it seems like maybe PayPal's negative earnings is affecting Square stock here after hours, which is something that we'll have to see here over the next couple of days. So Square, although I didn't buy anything today, I could have made more money, but again, hindsight's 2020. Just figured to share that with you guys. This is one that I traded yesterday. Netflix is another one that I bought yesterday. Did I cut losses today? Nope, guys. I'm just simply holding onto my Netflix. I'm happy that they're holding 340. That's kind of why I did not cut my losses, and I'm in right now at around 345, 346. Ended up buying in yesterday pre-market hours, and I just plan on swing trading this back up to at least $360 per share. That is my first sell target here on Netflix. So out of my positions, guys, I didn't really buy, I didn't really sell anything, but I'm still holding individual swings. Again, Netflix stock, Uber's another one that I'm holding. I believe it did well, based on the last time I checked it. Well, it actually closed down 2 cents, but I did see earlier in the day, yup, it was up around 37.50. So Uber, although it didn't close too well, I'd say the price action is still looking a bit bullish here, at least in the short term, based on, let's say, the 5-day, 5-minute. We're breaking out of, the downtrend on the hourly chart. We're, trying to test 38 bucks. So this is a good sign for me, and that's kind of why I am holding Uber stock as of right now. Now, guys, let me know in the comments what you guys did in the stock market today. Individual trades, stocks you're planning on buying, any earnings bets, options. I'd love to know down below in the comments. Now, let's talk about mighty old Tesla, Facebook, and all the other stocks that reported today, and a bunch of other stocks I'm watching to trade. So let's start off by talking about Tesla stock, ticker symbol TSLA, and my goodness, guys, this thing closed at $580 per share just about an hour, 9 minutes ago, and now after market hours, it hit an all-time high of $655 at the time that I'm recording this video, which is absolutely absurd. And you guys saw yesterday how I was talking about Tesla stock, for it to move up on earnings, it's going to have to crush earnings out of the park. Well, we got some pretty solid numbers here from Tesla. They reported EPS of $2.14 versus $1.72 expected. So they absolutely demolished EPS. I don't even know from what percentage that is in terms of a percentage beat, but off the top of my head, that's got to be a 22, maybe roughly a 20% beat in EPS. Revenue came in at $7.384 billion versus $7.02 billion expected, which is another insane beat for Tesla. So the two main metrics, EPS, revenue, they crushed it. Quarter four vehicles deliveries came in at 112,095, and they actually see that full year 2020, the deliveries should pass 500,000 units, and the key word here is comfortably. 500,000 units comfortably. That's just incredible. And here after hours, it's still pushing, guys. $660 per share. And you know that I don't trade earnings reports. I don't buy, before an earnings. But this is one of those moments that I wish I bought, guys, but hindsight's 2020. This could have very well dumped down 80 points, and I wouldn't have been a happy camper in that scenario, right? So if we're looking at quarter four Model 3 deliveries, those were 92,620, up 46% year over year. That's incredible. And if you guys don't know, the Model 3 is their mass-marketed vehicle, Tesla, that is. This is the vehicle that it's the most affordable and it's the most popular. And if you're looking at Model S and X deliveries, they were actually 19,475, down 29% year over year, but clearly their business right now, it's not focused on the Model S and X. It's really focused on scaling Model 3, bringing the Model Y to market, which is another vehicle that I think will be stellar. So the 29% down year over year for Model S and X, the stock clearly doesn't care about that. I'm an investor in Tesla. I don't really care about that because they're looking to scale their other vehicles. So in terms of key metrics, that is what Tesla ended up reporting. Sure, there's a lot of other numbers we can talk about, but this is not simply a Tesla video, and I cannot spend an hour talking about it. So for Tesla, that's what it reported. The stock right now hit a high of 660, again, like I said, which is a move of 14% since the stock closed an hour and 13 minutes ago. So at this point, guys, Tesla's, oh my God, I can't understand this. This is insane. The stock has gone up 350% in the span of 5-6 months. So this is just a watch, in my opinion. I'm not looking to buy it here. Maybe if we pull down, I'd consider it, but again, it's just a watch. For me, I'm just interested in seeing what it starts doing at these prices. Does it sell off? Does more volume kick in? That's kind of what I'm looking for here on Tesla. Now, on the flip side, Facebook, guys, ticker symbol FB, it did not do too well. And this is another key reason as to why I do not hold through earnings. Let's say I wanted to hold Facebook. I thought they were going to crush earnings. Yeah, that wouldn't have gone too well. I'd be down about 6-7% on my position right now if I were to buy anywhere in the 220 range, right? And you can see on the daily chart, you can see we closed at 225. If you were to buy it, gamble it there, you'd be down 8% right now because the stock's currently trading at $206 and it is dropping. So this is actually pretty good in my opinion if you are looking to add Facebook shares. But if you're, again, buying it for earnings, hoping it goes up, it's not looking too good for you. So what did Facebook do? Facebook reported EPS $2.56 versus $2.53 expected, revenue of $21.8 billion or $21.08 billion versus $20.89 billion expected. Daily active users came in at 1.66 billion versus 1.65 billion. Monthly active users came in at 2.5 billion versus 2.5 billion, so right in line there. And average revenue per user, which is actually a pretty cool metric here, beat forecast forecast. It came in at $8.52 versus $8.38 by FactSet. So why is the stock dropping after hours here? Honestly, guys, I have to do more research on that. I kind of filmed this video before I listened to their earnings call, so let me know in the comments down below if you guys know why this ended up dumping. But based off of the initial numbers, honestly, the earnings aren't too bad. They beat on EPS and they beat on revenue. Sure, they didn't kill EPS, maybe like Tesla and Microsoft, which is a disappointment here. Maybe people were pricing in more growth. This could be why a reason the stock fell. Maybe people were pricing in more growth. They didn't get that based on this earnings, and that was a disappointment. The stock dropped, right? That could be a reason why it ended up going down. And quite honestly, guys, back to that point of maybe buying into Facebook, this sell-off is actually putting us at a pretty decent spot. That 180 SMA, which has proven to be a support here over the past couple of months. And we know how great of a company Facebook is. Pretty much a flawless balance sheet. They make a crap ton of money. This could end up being a decent buying opportunity that I'm seriously considering heading over these next couple of days, not for a long-term basis, but for a swing account, because let's say the markets bounce back. I think Facebook has a good opportunity to bounce back with the market. It's not like Facebook's business changed overnight now that it's going to warrant a massive drop in the stock. I really think, just based off pure speculation and just honestly my opinion with experience here, I think it'll bounce back up eventually, but we'll have to see. Again, once I dive into the earnings call, we'll see exactly what's going down here on Facebook, and I'll talk about it probably in tomorrow's video. So another stock here, before we get too carried off, is Microsoft, and this is one that actually beat quite well, and this is why the stock's running up. Facebook, again, they beat by a small margin here, which is why it could be dumping. But Microsoft, they beat on a larger margin. Their EPS came in at 1.51 versus 1.32. So they beat EPS by 20 cents. That's quite nice. Revenue came in at $36.9 billion versus $35.67 billion expected. So yet again, another stellar quarter here for Microsoft based on those numbers. And I know just from doing some research into the company, and obviously you guys must know this as well, they're focusing heavily on their cloud business, Microsoft Azure, as they're battling with some of the top cloud players out there, being Amazon Web Services. IBM is up there as well, and there's a bunch of others, but Microsoft's fighting there. So if their cloud business does well, that's something that the stock, I think, values. You know, I think the stock, people, investors, traders, they're really looking at the growth businesses within the business, like that for Microsoft. If we're looking at Apple, we know Apple, their iPhone business is slowing down. That's why they're looking at their services. So these are some numbers to just keep an eye out for within different businesses. Understand the business and see what segment, that's the word. What segment of the business are they looking to grow, and are they executing well? And that could be a reason why a stock goes up, right? Just in itself, right? So Microsoft, that's what ended up happening there. PayPal, like I mentioned earlier, this could be why Square is falling after hours, but PayPal, EPS ended up being 86 cents versus 83 cents. They actually beat on revenue as well, $4.96 billion versus $4.94 billion, but their guidance for the full year of 2020 ended up being an EPS around $3.39 to about $3.46 versus the $3.49 estimate. And sales, $20.8 billion versus between $21 billion versus $20.79 billion for the full year 20. So revenue guidance is looking good, but EPS guidance came a bit under what analysts were expecting. So that, just from a brief look at the numbers, that could be a reason why PayPal here in the short term is seeing a bit of a sell-off. And PayPal here at about 112, this could also open up a pretty decent dip buy opportunity, putting us above that 180 SMA as well on the 4-hour chart. So keep an eye there on PayPal. Now, the last three that I want to talk about, AMD, they also reported pretty poor earnings. Their stock dumped, so keep an eye on this 180 SMA. That's kind of the main support level that I'm watching on AMD. Beyond Meat, we haven't talked about this one. We've been quiet on Beyond Meat. What's been going on here? Well, yesterday, JP Morgan cut the price target from 138 to 134. JP Morgan analysts downgraded the stock from overweight to neutral, and they also said the valuation is a concern. And I feel like ever since that catalyst that actually came out yesterday, there's been pressure on Beyond Meat. We saw the stock went yesterday. I think it hit 130s again. Did it, if I'm not mistaken? No, it didn't. It actually did on Monday. We hit 130s, and then the catalyst came out again yesterday, and ever since then, the stock's trimmed from 130 down to about 113. So for me, I'm looking at 110 on Beyond Meat. Maybe we end up holding that level. This could be maybe an entry point. We'll just have to wait and see how it ends up going down. So two more Chinese stocks, guys. LK, very similar to AMD in the sense that it's holding that 180 SMA on the 4-hour chart, being this gold line. On the 1-day, 1 minute, we can see a support at around 37.50. That's a pretty good sign due to that being kind of a general area over the past couple trading days that we've held. Now I just want to see some sort of break back into, I'd say, 38, 39 bucks before even entering. And NIO stock is the last one, guys, which tested 450 today, failed to break it out. But for me to get into NIO on my trading account, I'd need to see a 450 break, a 50 SMA break here on the 4-hour chart, and that could end up getting us to maybe $5 per share. So that is it for this video, guys. If you enjoyed it, feel free to go down below and hit that like button. Also, consider subscribing to the channel if you want to see further content from me. And don't forget to get your 2 free stocks valued up to $1,400 using my Webull affiliate link down below in the description box. I'll catch you all in the next video. Thanks again for all of the support. As always, peace out.